What's up, guys? Do you want to get rich? Maybe just wealthy. Whatever that means to you. Well, I think the best way for most people to do that is probably real estate. I won't explain why in this video, that's for another time. But what I will do is talk about how much money you need to buy a house. Not because it's magical or because I'm a genius, but I do wish that I knew sooner. For most normal people, even in cheaper areas, saving up 20% is not reasonable in a practical timeline. It could take you several years. An American earning a median income of $50,000 a year loses 20% of that to taxes. And that's leaving out all your bills. You could spend your entire youth saving for just one down payment. First, we'll discuss a way to buy an investment property for less that will help people who want a rental property right away. And then at this timestamp, which I won't know until I'm done with the audio editing, we'll discuss 3 options that most normal people can use to acquire properties. Feel free to skip ahead. You only need to afford a 20% down payment in a case where you are buying an investment property or a house that you intend to rent out right away and will never live in. But even that has a limited workaround. Starting with the least awesome possibility to buy into real estate with a lower down payment, it's usually called a hard money loan, which can be built into the mortgage by your lender if you're using a local lender. Usually only local lenders will do this, so not someone like PenFed, Chase Bank, or American Express, although all 3 of those are good banks that I have either used or have good reputations. Your choice of Google and a good real estate agent should be able to hook you up with a local lender. In my case, one of them is Midwest Mortgage and another is SunWest Mortgage. These lenders are in Florida and Maryland and have programs where they will finance half of your down payment and roll that into one easy payment for you alongside your principal, interest, taxes, and insurance. These loans do have a higher interest rate than a mortgage normally would. At this moment, you can usually expect a mortgage to have 3 to 6%, but a hard money loan can vary wildly by locale, and the ones that my lenders offer at this time, for me, are 7 to 9%. However, that higher interest rate will only be applied to the portion of your down payment being financed as a hard money loan, not the entire mortgage. Mortgages also offer a 30-year payoff term, which you should always take unless you just want to own your one home yourself and never intend to invest in real estate. But the hard money loan will usually have a payoff term of less than 3 years. However, a local lender can usually be negotiated with. So, if you have strong credit, an emergency fund, and they trust that you intend to use them to finance additional properties in the future, then you may be able to negotiate the interest down or have a more distant payment plan. Either way, a higher interest rate and faster payoff term does mean that $10,000 of hard money is going to cost you more every month than $10,000 of regularly financed mortgage. This makes your cash flow absolute trash, so I don't generally recommend it, but there is a better option that is more practical for the average human being. In the United States, there are 3 major mortgage types you could get: a conventional loan, an FHA loan, or a VA loan. Because it's the one that everyone's going to be able to use, we're going to start with the conventional loan. Unlike the 20% or 10% plus hard money options for a direct rental property purchase, if you use a conventional loan to purchase a primary residence, a home that you intend to live in for 12 months or more, then you only have to put down 5% in addition to your other closing costs. The seller will often cover closing costs for the buyer, and your realtor will be able to tell you the rate you can expect for closing costs in your area, although in most cases you can assume $10,000 to $12,000. You'll also need at least a 620 credit score to use this option. When considering making below a 20% down payment, a lot of people get concerned about PMI or private mortgage insurance. Private mortgage insurance is an insurance that your mortgage lenders will require you to pay when they are assuming a higher risk of the borrower, which is you in this case, failing to pay, usually based on how much equity you have in the property. However, while an initial loan with a smaller down payment will usually have some PMI, once your loan to value ratio improves to where you have 20% equity in the property or better, you can call your lender and cease the PMI. So if you owe $85,000 on a home worth $95,000, you will owe PMI until the balance you owe is 80% or less of the value. In this example, you could pay the loan down to $80,000 over the course of the first few years, and then if the home has also appreciated to be worth $100,000 or more, you are now below an 80% loan to value ratio or above 20% equity, so you can have the PMI removed. FHA loans have a minimum down payment of only 3.5% if your credit exceeds 580, but it requires 10% down if you're between 500 and 579. The interest rate on FHA loans also tends to be higher, partly because of a mortgage insurance premium that you'll generally have to pay for 1/3 of the loan's lifespan each month. Unlike PMI, you can get rid of the FHA mortgage insurance premium within the same loan. You either continue paying the premium until the original timeline expires, typically 11 to 30 years, or you refinance it into a non-FHA loan. Finally, contrary to popular belief, you can actually use an FHA loan for multiple homes. They just have to all be your primary residence. Finally, VA loans. For all our brave men and women in uniform, whether presently serving, previously serving, thank you for your service. And because of your service, you're going to get rich with this 0% down loan. Merca. Furthermore, no matter your down payment, there is no mortgage insurance. While there is a VA funding fee, and you will still be responsible for closing costs, the cash to close on a minimum down payment VA loan is still generally a lot lower than FHA or conventional, and the interest rates are absolutely gold. As an example, the cash to close that I needed for the same property that my lender handed me paperwork on, for the VA loan, it was $10,000 to close. For the conventional loan, it was $40,000 to close, and this was in Maryland, so real estate's a little bit pricier here than a good chunk of the country. All of these loan types also have cash out or rehabilitation and renovation versions of them. Usually, if you use this option, the interest rate will be a little higher. However, the real magic trick here is to jump to another property every time your 12 months of residency expires on the current loan, which will then enable you to take advantage of primary residence financing again. Now, with a low down payment and very little time for equity or rent appreciation, the odds of you buying a house at market value and being able to rent it in 13 months for profit is virtually zero. Which is why it is important to only buy houses well below market value and run comps or comparisons for both the home's good condition value and what it would rent for in your area. In order to buy below market value, you will probably need to be purchasing at least light fixer-uppers, which is why the renovation loans are usually worth it, even with the slightly higher interest rate. In the case of a rehab or renovation loan, where you're financing the work a contractor will do through the loan, the lender will pay the contractor upon completion. But you can also use a cash out loan, where you move into an ugly but hospitable property, then use that cash you took out from the mortgage to either pay the contractors or cover your own material expense if you want to do the work yourself. The FHA and VA loans have a reputation of having stricter inspections and taking longer to pay contractors. There is a positive and a negative to most anything. For more on hiring contractors, check out the video above. There are a handful of other more niche loan types and a lot more detail I could go into for each of these. If you'd like information on any of those in particular, please just say so below in the comments. Also, press the like button if you'd like other people to be able to find this info as well. And finally, subscribe and hit the notification bell if you'd like to see every weekend that I publish a new video. There are also links in the description for different stock trading apps or websites where you can get free stocks by using the link below and funding your accounts with $100 or more. You only have one life to live. Grow it relentlessly.